Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Thursday morning pre-market webcast. Okay, daily chart of the E-mini, and we're seeing a little bit of a give back after, what was the second day of essentially a run-up. And the bulls were able to take out a lot of big areas yesterday. They were able to convert the middle band very early in the day. The first 20, 30 minutes of the day, we were whippy off of the open, but each low stopped above the middle band, and that was that. That was that. Um, so it made it back through the weekly pivot, back through the 50-day exponential moving average, back through 95 half, which was a key area, and did as much as 2104 quarter. We set a risk marker in the room after the Fed announcement at 2104 and decided that we were going to trade against that, not against a 2104 stop, but just as it being a resistance area. So that's served us well in the later part of the afternoon, overnight, and again this morning we tested as high as 2103 quarter. So 2104 seems to be, at least for the moment, a bridge a little bit too far for the bulls. Now the bears have got a ton of work to do, to say the least. They have broken back below the 2095 half number. That was a preprint area before the FOMC. It was our proprietary upper level from yesterday, and it's been 2095 half has been a fairly reliable support resistance magnet type area for the last couple of months. So the fact that things have gravitated to there, they tried to bounce it off 2095 half off of the Europe Open and were successful. They went from 95 half up to 2103 quarter, and they just couldn't hold it. So now we're below that area. We're printing 93 half. You still have the 50-day exponential moving average to contend with down at 92. You've got the weekly pivot down at 90.80. You also have, let me pull up a 15-minute chart, a congestion area that extends from the 50-day exponential moving average, which is, it's closer to 92 at this point. The trouble with using moving average price levels on charts is you have to move them around because they're all moving targets. You got the weekly pivot at 29.80. You have the daily midband down here in the 88 area, and that is also S1, which is the dotted green line. You've got the daily pivot here at 96.58. So it's trying to convert the daily pivot here as resistance, go to work on S1. But you've got this four-handle band of potential support. And I wouldn't be surprised if the majority of the day isn't battled out right here. And whoever wins this band through the morning is likely going to win the day. If the bears are able to extend lower, you have to deal with the 86 half area, which has been fairly reliable support. You have to deal with 83, which has been support. And then as you back out here, here's your 83 area right here. Then you have to contend with the monthly pivot at 2074 half. You've got 61 to 63, and then the ultimate is the 56 half area. Now, as we go back onto the daily, you can see opportunity for both sides longer term. From a bullish perspective, you look at this chart and you say, okay, we've been able to establish a longer time frame higher low versus the lows of July 6th down at 34 quarter. What the bulls want to do is hold the mid band and then extend this above the highs from July the 20th at 26 quarter and take out this 2134 over here. If you're the bears, then you say, okay, enough's enough. We gave them their rally. We'll give them a lower high. We're going to stick them with a lower high here. We're going to break the mid band. But then, if you're the bears, you have to take out, number one, you have to take out 56 half. Number two, you have to take out 34 quarter. That's asking a whole lot of the bears based upon what I've seen from the price action, especially yesterday. The first day I'll chalk that up to a relief, face ripper type of a rally off of some serious down action. Yesterday smacked more of breaking some key levels and the bulls taking advantage of the tape. So the bears are going to have to overcome a lot of that. So we'll have to see. All right. Everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, princetontrader.com. Come check out the chat room. Come trade with us. Me, Spring Heel Jack from channelsandpatterns.com, Stan Nabosny from theartofchart.net. We're in there every day, all day, along with a lot of other fantastic team members trading the ES. Got Tony Rego trading the NQ. Something for everybody in there. And we would love to meet you and try to help you with your trading. I'll be back tomorrow morning with another webcast. Trade them well, everybody.